Hello all, welcome to the e-content session of Amal College of Advanced Studies. Myself, Dr. Umesh Yu, Faculty of Commerce, Amal College of Advanced Studies, Autonomous, which is aided by Government of Kerala and affiliated with University of Calicut. And it is located at Mailadi, Nilambur in Kerala state. Well, today we are going to discuss about a topic that is objectives of auditing. It is a part of auditing subject, and auditing is a very important subject in the BCom curriculum, and it comes in the 6th semester of the final year of BCom program. And this particular subject, auditing, is essential and an unavoidable subject in any stream, whether it is BCom specialized in computer application or whether BCom specialized in corporation or marketing or finance. So, my dear learners, let's go through this session. It is a very brief session just to give a preliminary idea about the objectives of auditing. So, first of all, let's see the introduction part. See, my dear learners, the word audit is derived from the Latin term audire, which means to hear. Audit is a thorough review of a department's records and reports in order to verify that assets and liabilities are properly recorded on the balance sheet and all profit and losses are properly assessed. To meet the objectives of audit, verification of revenue, expenditure, bank deposits, bank reconciliations, accounts payable and accounts receivable, cash, loans and advances, disbursement and regular transactions is very necessary. Now, the basic definition of auditing is it is a systematic and independent examination and verification of books, accounts, documents and vouchers of an organization to ascertain how far the financial statements present a true and fair view of the concern. It also attempts to ensure that the books of accounts are properly maintained by the concern as required by law. Now, there are many definitions of auditing explained by many authorities as well as many experts. So, for instance, according to the ICAI, auditing is defined as a systematic and independent examination of data, statements, records, operations, and financial or otherwise of an enterprise for a stated purpose. Now here ICAI means Indian Chartered Accountant Institute. Now, according to R.K. Mouths, an expert in this field, according to him, auditing is concerned with the verification of accounting data with determining the accuracy and reliability of accounting statement and record. Now, the basic objectives in auditing can be classified into two category: A. Primary objectives of audit, and B. Subsidiary objectives of audit. Now, what are the primary objectives of audit? The main objectives of audit are known as primary objectives of audit. They are as follows. First one, checking arithmetical accuracy of books of accounts, verifying posting, costing, balancing, etc. Verifying the authenticity and validity of transactions. Checking the proper distinction of capital and revenue nature of transactions. Confirming the existence and value of assets and liabilities. Verifying whether all the statutory requirements are fulfilled or not. Proving true and fairness of operating results presented by income statement and financial position presented by balance sheet. Moving to the subsidiary objectives of audit. Under this, the main subclassification is detection and prevention of errors. See learners, the majority of errors are those mistakes which are committed due to carelessness or negligence or lack of knowledge or without having vested interest. Errors may be committed without or with any vested interest, so they are to be checked carefully. Following are the errors: errors of principle, errors of omission, errors of commission, compensating errors, and errors of duplication. Now, errors of principle, what it is actually. Such errors occur due to lack of knowledge about the accounting principles. Such errors include wrong postings of entries, like creating confusion among credit and debit entries, not properly following the accounting principles, like the debit the receiver or credit the giver, the wrong valuation of assets, wrong allocation of income and capital. Next one is the errors of omission. When any transaction is completely omitted from being recorded in the primary books of accounts, this will not affect the trial balance. The entry does not appear in the books of accounts. It is very difficult to deduct such type of error. Then we have errors of commission. Such errors occur when a transaction is wholly or partially recorded in the wrong books of accounts. This error include wrong entries, wrong balancing, wrong posting, etc. It is very difficult to deduct the error as the trial balance remains tallied. Now we have compensating errors. See learners, when two or more errors disappear, the effect of each other. When the error in one account balance out an error in another account, then such errors are referred to as compensatory errors. This type of error will be deducted only through in-depth examination by the auditor. Then we have errors of duplication. Errors occur when the same transaction is entered twice in the books of accounts and same posted in the ledger. This type of error occurred due to the lack of knowledge and confusion of the clerk. The above mentioned errors can be deducted in the following way: checking the totals of trial balance, finding the amount of difference by totaling the both sides, halving the amount of difference, checking of journal and ledger, checking of subsidiary books, checking the balance of ledger, checking the posting of subsidiary book like purchase book, sales book, etc., checking the opening entries, checking the allocation or division of capital income and revenue income. Now, the detection and prevention of frauds, it is also a part of the objectives of auditing. The frauds are those mistakes which are committed intentionally and with the aim of harming the organization and with some vested interest on the direction of top level management. Mistakes and errors in the books of account which have been committed in a planned manner and with the view of deceiving others are known as frauds. Frauds always committed by intelligent and smart person. Such frauds are as follows: misappropriation of cash, misappropriation of goods, manipulation of accounts or falsification of accounts without any misappropriation. Now, what is misappropriation of cash? This means not recording cash sales in the books of accounts, not recording extraordinary receipt of cash in the books of accounts, making fictitious entries the customer account relating to discounts, returns, bad debts, etc., teaming and lading, recording fictitious cash purchase, making false entries in the account book, making entries for false donation charity, making false bill or over amounted bill for purchased goods and other expenses, not recording discounts received from creditors. Now, under misappropriation of goods, these all things comes like using the organization's goods for personal purpose, stealing goods from the store, not entering the goods received as sales return, overissue of goods, removing certain goods on accounts of purchase return. Now, what is manipulation of accounts or falsification of accounts without any misappropriation? Here, the provision of less depreciation on fixed assets are included. Non-provision of depreciation on fixed assets comes under this part. Overvaluation or undervaluation of fixed assets, providing inadequate provision for bad debts, not recording current year's accrued expenses, etc., not included income in the books of accounts, creating secret reserves, recording revenue expenditure as capital expenditure. Now, what is under or overvaluation of stock? Normally, such frauds are committed by the top level executives of the business. So, the explanation given to the auditor also remains false. So, an auditor should detect such frauds using skill, knowledge, and proper examining the books of accounts and facts. Now, what are the other objectives of auditing? To provide information to income tax authority, to satisfy the provision of Company Act, to have moral effect on employees, and to prevention of frauds and errors. So that's all, my dear learners, for the time being. See you in the coming episodes. with new such topics. Till then, have a nice day. Take care.